Hello, guys, and welcome to the Beton Crypto. You're welcome to yet another special edition with me, Ricky, and the Beton Crypto himself. So today we have this our special edition. For those who watched us last time, I'm sure you got value from what we shared with you. For those who knew already, I hope it added something to your knowledge. And for those who are new today, it might be something you have come across, but it might be new to some people. So let's just sit and watch. Please make sure you subscribe, like, share, and it will encourage us to do more of such videos.
Yeah, I got really good feedback from the previous video that they really enjoyed it and they want us to do like keep doing something like this, and I believe that's encourage her also to want to get more questions, and as you mentioned, guys, this is a learning process for everyone. Like I myself, I'm still learning. When I speak like this, I can learn, and we both learn. And she's doing this for her. There's a lot there's some stuff that she's already aware of, and there's some stuff that she's not yet aware of that maybe she's gonna learn, and maybe me throwing more lights. I'm gonna also educate myself more on it. So, what are we going to discuss on today?
Well, today, you all know it's always about crypto, okay? Today we are going to talk a little bit about blockchain, wallets, and altcoins, and more. So just be patient.
Yeah.
You're gonna enjoy it.
Yeah. She has her questions there that she's gonna pose as usual, Then we're gonna just have a conversation about it, then we'll see how we can, Yeah, so grab a cup of coffee yeah, let's enjoy the conversation.
Oh, for sure. So since it's always about crypto, I don't remember last time if we introduced or we explained what is cryptocurrency, because I know you have new visitors every day. So I would like to start with that very special common question. But what is cryptocurrency?
This question is really tricky because when you talk about crypto, most people just think of Bitcoin or like Bitcoin, which is like Bitcoin is the first cryptocurrency. Now, the word crypto is more of cryptography, like encryption, right? So it's more of money that is being encrypted, like encryption, like money which is like digital money.
Yeah.
Right. So cryptocurrency or crypto is like it's an encrypted currency.
Mm-hmm.
So it's a currency which is not like physical, it's digital, right? So when you look at
cannot touch.
Yeah, you cannot feel it, right? So all you have to do is it's more of transactional, right? Yeah. So that's just this most simplest way I can explain what crypto is all about. Like the normal traditional system, we have the fiat system, right? That we have different currencies like US dollar, euros, yen, and different coins. So this is like replacing those other currencies, right? Bitcoin being the big daddy in the game, Ethereum just like US dollar is the big daddy, euros, yen. So like down, the top 100 coins, same as the top 100 strong currencies in the world. The same thing, yeah. So that's just it.
Okay, it's like you're touching a little bit of some of those questions. It's like, did you look at my question?
Well, you're my wife, so yeah.
So going down there, I will just ask, what is a blockchain?
I'm not gonna try to use the high big term that they use or like to go online,
Be simple, please. Yeah, a lot of simple people here.
So a blockchain is like a book, like a book that records that you like. Let's say you have a diary that you every day you do something, you record it there. Right, that diary only you can access a diary.
Okay.
You have
so it is blocked.
Yeah, so it's the diary only you can access it. Right, whenever something happens, you record it there. You record it there. And only you can access. No one else can access it. Now, the code that you use to block the diary is being protected by so many people around the world.
Okay.
Right. So, and these people are computers. like they are, computers is digital currency. When you talk about blockchain, I mean, cryptocurrency being digital, so these computers, like in the case of Bitcoin, they are called miners, so they protect the blockchain. So they make the blockchain be what the blockchain is.
Safe.
Yeah. So only the person with a wallet that can connect to that directly, that is your money, that people use your currency. Only you alone have access to that.
Okay.
So the blockchain now is what gives cryptocurrency security.
Okay.
Yeah, it's just like and through the blockchain, you can go and see all the transactions that have taken place on that blockchain. Yeah.
Okay.
So the blockchain is now like the banking system that the bank run on, or the software that banks run on. Let me just use normal banking system.
Okay.
Yeah. So that's the blockchain, and most people who understand blockchain, they now want to buy cryptocurrency, knowing that it's safe to transact on.
Okay.
Yeah.
So let me just ask the next question: how can one buy cryptocurrency?
There are many ways you can buy cryptocurrency. You can buy cryptocurrency from centralized exchanges like Binance. By the way, if you want to buy cryptocurrency, there's a link below this video where you can click on that link, then you get your first cryptocurrency on Binance, OKX, Bybit, or Bitfinex. Yeah. Okay. So you can buy cryptocurrency on those exchanges. Now, these exchanges, they are like retailers, right? Or they are platforms that connect you with the blockchain. So they are the ones that protect your cryptocurrency for you. We have centralized exchanges and we have decentralized exchanges. All right. So what I mean by decentralized exchanges, I mean like you are the one who is responsible for to protect your crypto, while centralized exchanges are the ones that protect your crypto for you. Like Binance, OKX, they are like third parties that offer services. Just like I use the bank. The bank I'm a customer to the bank. The bank protect my money, and in return I pay a monthly fee, like charges, card charges, bank charges. Yeah. So that's just like how you can buy cryptocurrency. You can buy through, and you can even use your debit card to buy cryptocurrency. You can transfer money to your through like do bank transfer. So there are many ways you can buy cryptocurrency. You just see, first of all, you need to get an account. You subscribe to either of these centralized exchanges. The links are found below this video, and from there you are good. So
by subscription, you mean you put in you download and then you register, like download the app. And then
that's the beauty of cryptocurrency, in the sense that the app is available worldwide in the app store. So if say you live in a country where you don't have access to either of these centralized exchanges like Binance, OKX, Bybit, Bitfinex, Grofin, you can go to the decentralized platform like Trust Wallet, SafePal. So this one now is available to everyone worldwide. So this aspect now of cryptocurrency, you can get that, you can get the Trust Wallet, you download it, you save your keys, then you use your bank card, because now there are retailers who have integrated payment system where you can buy crypto through their payment rails. Then you get your cryptocurrency in your decentralized wallet. Yeah.
Thank you. Now I can confirm that I'm sure you saw my questions. Because each time you explain one thing, you are answering the next question. And my next question was supposed to be on the centralized and decentralized wallet, but that's okay. So thank you for that explanation. So I will come back to Bitcoin. What is Bitcoin and how is it different from other cryptocurrencies?
Okay, now, there are many ways people look at Bitcoin, but Bitcoin, how it came about around 2009, when Satoshi Nakamoto saw, the financial crisis 2008, how it was so devastating, the Great Depression, and it was like, oh, something needs to be done to resolve the financial crisis that happened. When you see the market falling or financial crisis happening, people losing money. It's not as if people are really losing money. Like, of course, no. I mean, people, the layman, the investors lose money, but there are some people who are making money from that. Okay. So few people, and these are the market makers. These are those who provide liquidity So those who have
Who manipulate the market.
yeah, who manipulate the market. If say market is dropping, it means someone is shorting the market, and someone is making money. But so few people are making money during that period. While the retail investors, like you and I, suffers. We have all our hard-earned, money, investment, and everything there, and boom, everything goes to almost zero. So Bitcoin was born, right? And Bitcoin was born to solve the problem of money. While it wasn't bound by any boundary, anyone, anywhere can get a Bitcoin, and Bitcoin is limited in supply. Only 21 million can exist, ever. So, like only 21 million Bitcoin can exist. It's divisible. So all the monetary characteristics is embedded into the Bitcoin code. Right. So but like me, I say Bitcoin is money for the internet. Meanwhile, some people look at Bitcoin as an asset, like real estate, or land or gold. So Bitcoin is being looked upon as digital gold, right? So it's being correlated to gold. Yeah, so that's just the few ways in which when people look at Bitcoin and what it is. Like personally, I look at Bitcoin as a hedge against inflation, right? So if I want to hedge against inflation, I think Bitcoin can give me that hedge against inflation.
Okay.
Yeah.
Bitcoin is actually a means of payment. A lot of people bring in their businesses and they use Bitcoin as a means of payment. And the layman or someone who doesn't understand cryptocurrency will just come and tell you, oh, do you know about cryptocurrency? They'll think because they are using that means of payment, that is cryptocurrency.
Yeah. Like, okay, there are some shops in Dubai and other places in the world that accept Bitcoin. Like Bitcoin is a legal tender in El Salvador, and say one other country, I've forgotten the name of the country, but in other countries, Bitcoin is regulated, like crypto is regulated, it's looked upon as an asset. Some laws look at it as a property, that you pay tax on every year. But it's not just upon, like, it's not looked upon as just one thing, like, okay, you buy and the value goes down and so on and so forth. Bitcoin is more than that. It's more than on how people perceive it. It could be called money for the internet. That you can use to process transactions online. There's a lot of issues going on right now with third parties, people who don't offer PayPal or Visa or like these payment options on their website or on their platform. People don't tend to trust them, right? But now with cryptocurrency, or the blockchain, you can transact with someone anywhere in the world, and you trust that the blockchain is going to perform what it was designed to do. Because the blockchain, it executes based on authority. So if you give the authority to the blockchain to ratify or to validate a transaction, you don't need to be afraid whether the person has the money or not. You can see that the money is already there because the transaction goes through when the money is there, so no one can scam you like that. So it's trustless. You understand? So it's really an amazing technology or innovation that I think was brought to the internet. Like if it's those who actually deal with money, with transactions, that you cannot transact $4 billion on a Sunday evening or on a Saturday evening or on like weekends. The banks are closed, right? You cannot do any transaction. But with cryptocurrency, you can move billions of dollars anytime you want to. And look at when Bitcoin was established or created, and from that day to today, it has been one of the most performing assets ever in the history of finance, ever. So yeah,
guys, I hope you're grabbing it. I hope you're taking it. I hope you're feeling it. So yeah, what is altcoin?
Okay, now altcoins, the name comes from alternative coins. So like this altcoin means alternative coins. Yeah. So if you cannot buy Bitcoin, so what other alternative do you have in the market?
Okay. Yeah, I get it. Yeah. Guys, I didn't know about this. I've been like, oh, let me buy this altcoin. Let me
It's like native coin.
This altcoin has been launched.
Yeah.
So,
Now, one thing I want to stress here, people to understand this. Coins or cryptocurrency, when you hear the word crypto, Bitcoin, Ethereum, Cardano, these are like, it's crypto, is coins, right? But they are real companies behind these cryptocurrencies. I mean, real companies behind these cryptocurrencies. But Bitcoin is the only cryptocurrency, that has no head, there's no, ever since Satoshi created Bitcoin, he disappeared. No one knows who Satoshi is.
yeah.
So there's no one who can claim that I own Bitcoin. No one can claim that. There's no one who is like the Bitcoin leader. No one. So it's truly decentralized. Russia can have it. America can have it.
Anyone.
Canada can have it. That's why you're seeing now America is like George Form. You're saying they want to be the crypto hub of the world. Because the more, it's like gold. The more you have gold, the more power you have.
Okay.
So the more you accumulate Bitcoin, the more you have power for the internet. The more you control the internet. So that's just the mindset I think most people don't understand about this.
Okay. You're mentioning Ethereum. Now I want to ask, what is Ethereum and smart contract?
Ethereum is like, okay, when Bitcoin was established, Bitcoin had some flaws, issues, and the issues was, okay, it was difficult to run application. Now, a blockchain is, let me go back a little bit and then I'll come back. A blockchain is like, let's say App Store, right? Apple Store or Play Store. Or, Apple have Apple Store, Google have Play Store, right? Now, what's the function of this Play Store or App Store? Is for different companies to launch their application on, so if you want to download any application, you must go through, these app stores to download these applications. Now, Bitcoin blockchain, Ethereum blockchain, they act as app store. They are applications that other projects built on those blockchains. So they built different applications. So the blockchain now, the native currency of the blockchain is what is called cryptocurrency, coins. Meanwhile, the projects that are launched on the blockchain are called tokens.
Okay.
Right. So there are differences, because this project, they have to use, just like, okay, let's say you want to go to Nigeria, to live in Nigeria. You have to use the Nigerian currency to operate in Nigeria, right? To go about your business. Same on the blockchain. It's like an entity, like you have to use, developers have to use the native currency or the governance currency to process transactions or to run their application on that blockchain.
Okay.
Right. So now with Ethereum came to solve most of the problem that Bitcoin had, the Bitcoin blockchain, had. It was difficult to scale on the Bitcoin blockchain. It was so difficult to build the Bitcoin blockchain because the gas fee was so expensive. Gas fee is what developers pay to build on that platform. Just like people who launch their application on App Store, they pay Google and Apple some fee. Apple take about 30%, to allow application. I think maybe it's reduced to launch on, or to host that on the App Store. So it's a business, right? Okay. Now the blockchain was developed to put the people who will now benefit from the blockchain.
A lesser fee.
Yeah, they pay a lesser fee to run application on the blockchain. But the people who benefit to make that blockchain secure are the miners, talk about miners or validators. There are differences. Yeah.
You keep getting to my question. I was about to ask, what is a token? But I don't. Have you answered that?
I was like tokens are projects that launch on blockchain, while coins or cryptocurrency are the actual governance token, or governance coin, or token of that blockchain. So, like Bitcoin, Ether, Ethereum is the blockchain. ETH is the currency that is used on the Ethereum blockchain. Okay. Bitcoin is the blockchain. BTC is the currency used on the Bitcoin blockchain.
Solana. Okay.
Yes, Solana Solana is the blockchain. Sol is a cryptocurrency used on the Solana blockchain. So anyone who want to launch an application on the Solana blockchain must hold Solana. They must hold Sol.
I think I feel that. High five. So yes, that brings me to why I was saying that my next question, it was about mining. So I was about to ask, what is mining and how does it work?
Yeah, miners. Miners are machines that validate transactions. So their sole purpose is to secure the network from hackers. Now, how you put it, for a transaction to go through, to be recorded on the blockchain, it has to be sent to so many validators, to so many computers, like in Bitcoin case, and the person or the computer that solved the puzzle is going to be the one to be rewarded. They see that you are paying to the network. So, for example, if say I want to send money to you, like Bitcoin to you, and I press send, it has to go to all the machines that are available online at that point in time. So any hacker who is going to want to attack your money, like want to hack your money, has to hack all the computers.
All the computers, and that's not possible.
That's not possible. You cannot hack all of them up, because if say you send all of them, have to send the exact message. But the person who solve it first receive the receipt. So the other one will confirm it. That's why you see when you are doing transaction, look at it everywhere. You see it says 4 validators, 3 validators. Like they are validating the transaction. Well, it's more different. Like validators are more different to like miners. Even though it's almost the same. Like they are. Okay, I don't know if we're talking about proof of works, proof of stake. But these are all aspect of securing the blockchain network. So miners, their sole job is to protect the cryptocurrency, to protect the blockchain from external attack like hackers.
Since it is that secure and it has so many validators, how can I lose money in this space?
Remember, I told you that I gave you different scenarios about centralized exchange and centralized exchanges. Now, if say you are responsible to keep your money, like to keep your cryptocurrency, they say in cryptocurrency, if it's not your keys, it's not your money. So if you're responsible to secure your money, meaning you download the Trust wallet or any hardware wallet, you have it, then the only way you can lose money is if say you give your secret keys or your password to someone else, or someone trick you. You go to a platform and they tell you, okay, this is a new cryptocurrency, buy it, which is a scam, right? So it's not as if the blockchain stole your money. Someone, create a program to, deceive you, thinking, okay, if you give your authority, of course, the blockchain is going to validate your transaction. The miners are going to enjoy their fees while you losing money.
Okay, but can I also lose money if I use a wrong contract address? A wrong address or on a different blockchain?
Like, okay, there are multiple blockchains, right? And every blockchain has a unique contract address. And this contract address, remember I told you, it actually is like an agreement between the blockchain and you who is doing the transaction. So you're saying to the blockchain that this contract address belongs to, for example, let's say Binance blockchain by BNB. I want to send USDT or Bitcoin through this blockchain to this person who is in that blockchain. So you cannot send money from another blockchain to another blockchain except it is through a bridge. So this is another system program also, or another application which is called bridge. That you can bridge your coins from one network or one blockchain to another blockchain. All right. So just like, okay, if you want to send money to, let's just use this normal scenario. If you belong in the same bank, right, I want to send money to you and you know send money instantly because it's the same network. Right. But if say it's another bank, it has to take some time. So you are now bridging that money in different system. So the same thing with crypto. So you are bridging, even though it arrives instantly, because it's cryptocurrency, but you have to go through a bridge. And if say you don't go through a bridge, you're going to lose that money because you will use a different contract address to send money to a different blockchain.
I wanted us to talk about wallet, but you have explained a lot about wallet and the different types of wallets. So we won't get into that. I realize that cryptocurrency is so volatile. Why is it that?
The same, but they're just saying that volatility is the advantage of money making. Or volatility is also the advantage or disadvantage of not making money. Now, how investors make money is through volatility. Volatility means there's uncertainty in the market, and all the financial tools are in play, like, charting, doing research on everything you do to make sure you're buying the right thing, knowing the right time to buy what you're buying, because there are real investors who are investing and they're going to cash out profit, and there are people who are trading daily who move money here and there. So crypto being volatile is one of the reasons why most people are in cryptocurrency. And also, another reason why crypto is so volatile is because of the liquidity that is found in cryptocurrency. Now, liquidity is what moves the market. Right. If there's less liquidity is like money. For example, if you go to the ATM to withdraw money, you use a bank card in Cameroon, let's say a Visa card from Cameroon or Nigeria or anywhere in the world, you bring it to, let's say you are in the United States or any country, where you are using a different Visa card, which is not issued by your bank or the country that you are going to. You go to the ATM. Because that bank is in the international system, and Visa is the one who provides that. Means the other banks will accept that Visa. So you're going to be able to remove that money, from the ATM because of liquidity. Because the bank already have liquidity for you to withdraw that money from that ATM. Right? Because ATM is a business, and most of the time it's not the bank that owns the business. It might be someone who owns multiple ATM machines. They have license to operate, and they are operating directly with the bank. So they have liquidity to process a transaction, before the money is even sent to them by the other bank. Yeah.
Guys, are you feeling it? How simple he's taking it? He's breaking it down for us.
Yeah. So with cryptocurrency now, if you're buying and there's less money in liquidity to issue out that transaction, like so for the transaction, then the price will automatically fall, because now you have taken lots of money.
Yeah, you're stressing.
Yeah. So when someone else want to sell, they cannot take out their money because you have taken most of the liquidity out and you're from the market. So their value now will be almost nothing. So if you go to the ATM and you remove all of the money from the ATM, you go to the ATM, you put your bank card, you're gonna see why, okay, you have this account balance, you cannot withdraw money because the bank has no liquidity. Yeah.
Oh wow, interesting. Wow. You really break it down. You really break it down. Some things that I thought I knew, but I was really like thank you so much. And I don't know if I have a bonus question, because I guess we have come to the end of this yet another special edition. And I know you guys have enjoyed it, and you're going to enjoy it. For those who are going to watch it later, after. Okay, you can watch and rewatch, and make sure you share, because there are a lot of people around you who want to know and benefit from this. I will do this with him, but I'll also watch again, to get the answers to the questions that I have asked. Let me see if I have a last question. I don't know even. What is an ICO?
ICO. ICO is this initial coin offering, right? But now, crypto is also correlated with the stock market, right? As I mentioned, these are real companies, like not like, okay, the blockchain, maybe a group of developers, they build the blockchain. Now the blockchain now is a business also. So if say the blockchain is developed by developers who actually are the ones controlling the blockchain, let's say for example Solana team actually is not that like it's different, like the blockchain is different from Ethereum and Bitcoin. So there are people who are responsible for that blockchain. So there's a system how like they make money somehow. The blockchain makes money. Okay. Now if say the blockchain now, like let's say a project will not work on the blockchain, or before, so let me use another way. Before the blockchain was created or established, the Solana team must have reached out to investors, right? Say, okay, we are going to build a blockchain now, and we want to offer you guys, some coins in return to an investment that you're gonna give me. Just like you are saying, like entrepreneurs or businesses are gonna go to get to look for venture capitalists, or seed investors. I'm talking about the normal traditional way of raising money. But with cryptocurrency, they call it initial coin offering. So it's a way to raise money to promote or to launch a project or to build your project, something like that, right? So if you don't have money, you go to investors and you offer them, they're gonna have in a different price. So you're gonna launch, let's say you're selling to them now, let's say one coin for $1. But when you launch it, one of that coin becomes $2. So now they're gonna buy more, give you more money based on how the economics is, like how it is, like how you have designed it to be. So you just look at ICO as a way to bring in investor to your project.
Okay. Like when you have a project, you go to
investors,
look at investors, and they'll give you
you give them coins.
Okay.
So the ICO, those who go in for ICO are the ones who get the first coins, like the first offer. So the tokenomics is always divided into different categories. We have part goes to the ICO, some go to airdrops, some go to the community. The community are those who now buy directly from the blockchain after it has been launched.
Okay.
Right. Yeah.
Wow. Thank you, guys. I hope you have enjoyed it. By the way, if you have any questions, just drop it in the comment section. Any topic that you want us to talk about, just drop it in the comment section. What you have not understood, please feel free to drop it. And in the comment section below or in the description box, you'll find different links. He's also having he has an Instagram group where it's free. You don't need to pay anything. Telegram group. The link is found below. And if you want a one-on-one session with him, the link is also found below. So he is available. He can also mentor you how you can secure your money in this space, the different type of blockchain wallets. So all of this, it's any question, anything, you can just let him know. And please.
And to add, before I go, I'm gonna just say to you who is watching right now, don't buy any cryptocurrency if say you don't understand what it is, because you are going to lose your money. And in the end, you're gonna blame cryptocurrency for losing your money. Don't buy anything unless you understand what you're buying. And if you must buy something, first of all, at least learn something. So if you have like $1,000 or let's say $500 that you want to buy something, at least learn something first. Like part of this is a learning process. But if you want more, I can offer you my consultancy, one-on-one consultancy, where we're going to have a conversation. And I also, if you want to learn trading, how to trade, I can teach you how to trade. I'm also a trader and investor. If you are interested in either of these, then the links below this video will take you to my free Telegram community, where you are going to mention to me that you're going to mention there that you want to learn trading, or maybe you want one-on-one with me. Then I'm going to tell you how we can go about it. So that's just how I think we can end the video today.
You just ended that because So thank you once more, and thanks for your encouragement.
Don't forget to subscribe, by the way. Subscription, and at least react to the video or commenting below is gonna help the video to reach out to more people. I'm gonna appreciate if you at least react to the video by subscribing, thumbs up, leave a comment below, something like that. Share. Until then, guys.